Lynette Zang is the Chief Market Analyst at ITM Trading, which is a precious metals brokerage that has an A+ rating from the Better Business Bureau. She is an economist, she is a currency expert, and she's my guest today for the first time. Lynette, thank you so much for joining me.
Well, thank you for having me, Jason. I'm really glad to be here today.
I'm glad you're here. You've got so much expertise in terms of currency. You've been studying it for so many years. And of course, we've seen so many people doing YouTube shows and blogs and things about cryptocurrency. And I know there's a lot of people in the crowdsourced community who watch this program who are interested in it, but maybe, like me, they're not economists, they're not investors or financial experts, they're not computer experts, and I know you're not specifically a crypto expert, but you are a currency expert, and you've been talking quite a lot about crypto lately. So I wanted to get some of your insights as to what people should be thinking about in terms of the pros and cons of cryptocurrency versus more traditional financial instruments.
Well, we should probably start with the foundation, because we talked about money, and there is no doubt in my mind but that the powers that be want us to go cashless and into cyberspace and cryptocurrencies. And so I think, this should be taught in grade school, to be perfectly honest with you, but it isn't. So I want to back up to move forward, if that's okay.
Absolutely.
And I'd like to, okay, good, because I'd like people to understand that the whole reason why we really have money is it enables us to differentiate, but what we needed was a tool to hold any excess labor that we generated today for use in the future, with a way to store the value of that labor. So for example, just to be more clear, let's say that I'm a farmer and I grow this field of corn, and my family and I eat all the corn that we can, and we don't need any more corn or anything else from our neighbors. So I still have corn in the field. I don't want it to go to waste. So I needed a tool to hold the value of the labor I put into the corn until I needed it down the road. Lots of things have been tried over the years, but only gold meets all of the criteria to be a good money. Plus, it is labor-based. So when we were on a gold standard, you were actually trading your labor for somebody else's labor. Okay, that's fair. The problem for the governments is that if they wanted to tax you more and spend that money, you knew about it. And that was really not what they wanted. So in 1913, they legalized the Federal Reserve, which is neither federal nor does it hold reserves. It is not a government agency. It is a private banking agency. And they put in what's called fiat money. So I'm sure a lot of your viewers, if they listen to CNBC or Bloomberg, they'll have heard that term. The literal translation is by decree. So the government said, this is now legal money for tender. But whereas the most important function of money to begin with was to hold that value over time, because you work for it, you save it. The most important function, and this is according to the people that set the system up to begin with, the most important function of fiat money is inflation, which guarantees that you cannot buy the same amount of goods and services over time. The brilliance, the genius, and we're at the end of this, that's why I'm bringing this up as well, but the genius of the fiat money system was historically, this was the first time that central banks had made an attempt to control the rate and speed of inflation. And anybody that listens to the central banks at all always hears that 2% target. They have a price stability mandate. In other words, you're supposed to keep prices stable. Well, to me, This would be if this cost me $5 today and $5 20 years from now, that's a stable price. But the 2% inflation slowly robs you of that value over time. You just don't see it. And for those of you that are, I'm 63. So for those of you in the baby boomer generation that are listening, inflation used to be a dirty word. Then it was, since the crisis, it's going to save us. And now that it's reared its ugly head and we've got some wage inflation, now it's creating a lot of havoc in the markets.
Right.
So the point of all of that, though, is officially, according to the Federal Reserve, and I'll send you this link, so Megan, please write that down, on the purchasing power value of the dollar from the Federal Reserve. It's my favorite website, so you'll have that link. But officially, there's only 4 cents left out of the original dollar.
Wait a minute.
And the
Wait, whoa. You're saying, so that's mind-blowing, 4 cents. One of my biggest concerns, I guess, or points of confusion is this whole system of the petrodollar. I understand the gold standard and we have a dollar, it's a dollar worth of gold. But when Richard Nixon and Henry Kissinger created this petrodollar system in partnership with Saudi Arabia and the rest of OPEC, I don't know much about economics, but I see that as an unsustainable problem that is still, biting us on the rear end today in terms of 9/11 and all these treasury bonds that Saudi Arabia holds. What can you say about any of that?
Well, what you're actually referring to is, the system started into the fiat in 1913. The crash in 29 was used to justify taking the gold away from the population. And in the 40s, we became, quote unquote, the world reserve currency, which means globally, all assets and all instruments are valued in terms of dollars, which forced everybody in the world, it was in the 40s at Bretton Woods, that everybody in the world agreed to peg their currency to the dollar because we promised to hold its value, the value of a dollar, to $35 an ounce. But when we started funding the Vietnam War, we started printing a whole lot more money and devaluing the currency. So in other words, we were reneging on our agreements in the 40s. And in the 60s, globally, so what global governments had the opportunity to do is to send in dollars and convert it. The US had to convert it to gold at $35 an ounce and send it back to the other country. So there was actually in the 60s, globally, everybody lost confidence in the dollar. We citizens didn't realize this, but globally everybody did. And there was a run on the dollar in the 60s. And Megan, if you mark that down, I'll send you that link so you can see that graphic as well, where there was a massive run on the dollar. In 69, we're on the top of money. Okay. In 69, the IMF, that's the International Monetary Fund.
Yes.
The members of the IMF there are 196 countries in the world, 189 of them are members. That's every Treasury Secretary and every central bank chief. Okay, they created what's called the SDR. It stands for Special Drawing Rights, which is a name, just like any other name. Okay, but they created that in 69 to take over as the world reserve currency because the world had lost confidence in the dollar. It was pretty clear we were spending, more than we could and devaluing the currency very quickly.
Right.
So our Treasury Secretary actually went to the IMF, offered up that position. But at the same time, Kissinger went to Saudi Arabia, and in exchange, what a deal. I'm telling you, what a deal. But in exchange for our protecting the Royal House of Saudi, then they would make anybody that was buying oil, not just from Saudi Arabia, but they had that whole region,
Mm-hmm.
everybody had to only accept their oil. So the SDR was put asleep, and this is another conversation which your viewers, listeners need to know about the SDR and the IMF.
Mm-hmm.
But the SDR was put to sleep. It was not dismantled or disbanded, and the systems put in place, but it just kind of went to sleep. And you're absolutely right. Then we retained that position as the world reserve currency because if you were going to buy oil, you had no other choice but to do it with dollars. And the other agreement that Saudi Arabia made was to take any of their extra dollars or excess dollars and convert them into, oh my goodness, treasury bonds. I think we got a heck of a deal because oil is physical and it's a diminishing asset. However, over the years, it became pretty apparent, or I shouldn't say that. Let me back up here for 1 second. So once we did that, then the gold was, well, prior to that, gold was released from its tether because if Nixon hadn't closed the gold window, in other words, just like the public was disallowed from converting dollars into gold in 33, in 71, Nixon disallowed other governments from converting their dollars into gold. Now, we hear it as, well, Nixon closed the gold window. Okay, maybe that's not that big a deal. What's the big deal about that? Well, the real big deal about that is what he actually did was hand over full control of inflation to central banks. And he disempowered other governments or governments because we had nothing to hold, the other governments didn't have anything to hold our government's toes to the fire. So they could now create as much debt as they wanted to. And you're 100% right. This is now, well, what are we told backs the dollar? Full faith and credit of the government. And that's not just true with the dollar, that's true of all currencies because they're all fiat today.
Yeah.
So let's translate those words because we all heard them, we have all taken them in, but as long as you have faith, then you will extend credit. So what really backs the dollar and all money today is the ability of the government to grow debt. Take a look at Venezuela. They cannot go out into the global community, or they're really struggling to go out there and grow more debt because confidence in their ability to repay that is gone. They've already defaulted on government bonds, more than once, and in fact, that's true globally. So it is that confidence, that faith, and the rest of the world doesn't have that faith in us anymore. They don't have the faith in the fiat money anymore.
Well,
And
wait,
so
let me stop you a second, Lynette, because that's a lot
Okay.
of info and I want to make sure I'm understanding it correctly. So you're saying that, I think I have a good handle on the petrodollar and the problems associated with that. I'm actually very concerned about that, and I'd love for us to talk about that some more. But so you're saying the value of money is based on the confidence to grow debt, meaning people still have confidence in the United States, so they'll lend the money. Is that it?
Correct.
Uh-huh.
Correct.
But if people
that's been
found out
shifting.
that Barack Obama was just printing 1.4 billion, that maybe there's nothing backing it, and he's sending it to Iran, who are maybe using it to fund Hezbollah or terrorist organizations, maybe they might lose that faith.
So let's kind of back up a little bit and let me just kind of help you understand something
Sure.
a little bit more. Barack Obama did not print money out of thin air. What he did was he created debt, and then the Federal Reserve pushed a button on their computer and they created the money. And then instead of the Federal Reserve giving that money directly to the U.S. government, they give it to a bank, one of the commercial banks like J.P. Morgan, Goldman Sachs, those guys, the big kahuna banks. And then those banks sell that and create the money to the government. So the government has to pay interest on that money. It is not created out of thin air. And in theory, like any of you listening or watching, if you can grab a dollar bill or any bill out of your purse or your pocket and take a look at it, what you're going to see up at the top is it says Federal Reserve Note. Well, a note is a debt instrument. So in theory, this money is a claim against the government, against the Federal Reserve. It is interest-free, zero-interest debt, which is why they have a problem with cash. This is all tied in, and it's very, very complex and complicated, but you may have heard about the war on cash.
Well, that's the move towards credit cards, digital money, cryptocurrency, et cetera, right?
Exactly. Yeah.
And we're going to go in that direction, of course, with our conversation. For people who are just joining us, I want to remind everyone that the guest right now is Lynette Zang, and Lynette's the Chief Market Analyst at ITM Trading. She's got a great YouTube channel that's very informative. It's sometimes confusing for me because I'm not that familiar with all of these complicated economic things, but as we talk, it becomes sort of more and more clear that part of the way this all works is that it's intended to be more complicated than the average person can understand necessarily.
Oh, it is fully intentional. John Maynard Keynes is the father of Keynesian economics, which is the system that the current monetary system is set up under. And they knew two things. They knew a lot of things, but they knew two things very clearly. Number one, they absolutely knew that people marry the legal money of the state. So what changed between 1912 and 1914? Well, the whole system changed, but they kept the name the dollar. And the same thing in 1971. If you had a dollar in your pocket in July of 1971, it had at least a partial backing in gold. If you had that dollar, a same one, or even a brand new one, because they keep the look of it very close as well, then you went from a gold-backed dollar to a purely debt-backed dollar. Well, what stayed the same? The name, the dollar. But gold created restrictions on how much debt could be grown because it was based upon how much gold they held in deep storage. So that's one of the reasons why there was a big problem with that. Well, today, and for those that have been paying attention, you might have seen all the negative rates in Europe and Switzerland and Japan on not just government debt, but corporate debt as well. Negative rates mean that you are paying somebody to borrow money from you.
Wow.
Okay, that doesn't make any sense at all.
No, it doesn't.
Well, here's the problem. The tool that central banks use for stimulating or I guess we should say managing the speed of inflation is interest rates. Well, interest rates, 90% of the industrialized world is anchored somewhere near zero. So they don't have that tool anymore. So since 2008, all of the policies, all the central bank policies have been huge. Well, actually, since 1913, if I'm saying the truth, it's all experimental. What can they do? What can they get away with?
Right.
So if you've used up your biggest tool, like really, governments are not buying the U.S. debt anymore. It is more pension plans. That's a whole nother thing.
Right.
In fact, I think next week I'm talking about that piece in retirement plans. However, they've used up all the tools. So our government has actually been calling, the Treasury Department specifically has been calling for a reset. And central banks globally have been calling for a financial system reset since 2013. Because in 2008, and I'm not going to get into this, but I have lots of videos on it with lots of evidence, the system died. The fiat system doesn't work anymore. Everybody went down to zero rates. Now, if you opened up your bank statement and you had $1,000 in there and you opened it up the next day and it said you had $900 in there, and it wasn't because you were spending it, it was because of the fees that the bank was charging you to loan them that money, which is really what you're doing when you make a deposit in a bank, and the next day if you open it up, it's $800 and it's all the fees, what are you most likely to do?
Take the money
pull
out.
out the cash. Exactly. Yeah. So it thwarts them. However, they have stated this in every single research paper. Every time they open their mouths, I'm telling you, all you have to do is listen. They're telling you what they're going to do.
Right.
Once we go cashless, so we're into cryptocurrencies, there are no limitations to how low they can push interest rates. In other words, now you open the account, you've got $500 and it's all fees. If you cannot preserve your principal by taking out cash, what are you likely to do?
Not put your money in the bank.
Well, if you don't have any choice, if everything is in cryptocurrency and everything is digital, that's not an option.
Right.
So you're likely to go out and spend it on anything you think might hold value.
Got it.
Again, look at Venezuela. They get a paycheck, they rush to buy something. The grocery stores are barren because there's 3 economies that grow up around this stuff, but they don't have any choice. They demonetized most of the currency. In other words, if the government says, this is legal money, they can also go, it's no longer legal. You can't use it anymore. And the end of 2016, we saw India demonetize, I think 82 or 85% of the currency that was out there. And then like 12 days later, something like that, they did the same thing with with Venezuelan currency, and they shut the border.
And
so
we've seen what's going on in Venezuela. Out of control is absolutely correct. I mean, it's so interesting to hear you speak about this, Lynette, because it just, even if people don't understand the details of how you're laying it out, it's becoming quite clear that this is an extremely complex system that at many points seems like it's actually intended to deceive the user, and the user is everyone.
100%. Right. Well, right. Because what inflation also does is it creates nominal confusion. Okay, and they knew that people don't understand inflation. So let me explain nominal confusion, because it's an extremely important concept.
Please.
Let's say 20 years ago you had a $20 bill, and today you have a $20 bill. Nominally, they are identical. But what that $20 bill would buy you 20 years ago and what that $20 bill buys you today is vastly different.
Yes, yes.
Okay? So like in 71, the average salary was like $9,600, and a family of 4 could live on that comfortably. I'm not saying they were super loaded.
Well, but a Cadillac was $5,000.
Right. Today, I think the average wage is at $54,000. So that sounds a whole lot better. I mean, who wouldn't rather make $54,000 than $9,600? But how's a family of 4 living on that $54,000 a year?
Well, and how much does an equivalent Cadillac cost? Much more.
Right. But let me tell you, if you're only making $54,000 a year, you're not driving a new Cadillac anyway.
Definitely not. So now we're getting into this important part that I want to touch on, because adding software and computer technology to this financial mix seems to obfuscate it even further. And earlier today, you had a really interesting guest on your show, a guy by the name of Eddie Veritamos. I hope I'm pronouncing his name correctly. And you were talking about some of your... Oh, we've lost Lynette. Let me see if I can get her back there. That's interesting, isn't it? We had a very good connection a moment ago. Let me try her back. Well, Lynette and Eddie were speaking about cryptocurrency, which is where we're going to take our conversation now. Let me get her back on the line there. I'm not sure why that would have occurred. Sorry about that.
Oh,
Strange.
I'm sorry about that too.
No idea
It was
why
in a
that would
good
have.
place too.
Yes. So I wanted to take our conversation towards cryptocurrency. I would describe myself
Absolutely.
as being enthusiastic and interested in cryptocurrency, but like anything that I don't really fully understand, or even things that I do understand, I tend to be very skeptical. And that was one of the things that drew me to your channel, was your vast knowledge of currency and economics, and your, what I would describe as a positive but skeptical outlook on cryptocurrency. Now, obviously, the most well-known cryptocurrency would be Bitcoin, and there's been quite a lot of volatility in Bitcoin. What can you tell our viewers who are maybe seeing you for the first time in a general sense about Bitcoin, about cryptocurrency, this whole phenomenon?
Well, interestingly enough, I came across in one of my periods of research, when I was researching this stuff, I came across an NSA, which is a government agency, white paper on how to create cryptocurrencies. And a lot of the same lingo that we hear: decentralization, wallet.
Wow. I'll tell you, someone does not want me to hear what Lynette has to say about cryptocurrency. I wonder if it's someone who has the ability to impact Skype on my computer. We may recall Cheryl Atkinson told us, hello again. I just want to
Okay.
point out to our viewers that the highly respected journalist Cheryl Atkinson, who I don't know if you're familiar with Cheryl or not, but she once told me that Skype is not secure and she doesn't trust it. So I wonder if someone is intentionally affecting our Skype connection. But forgive that interruption, Lynette. Please continue with what
That's
you were about to
that's
say.
fine. I'm going to back up, because I discovered a 1996 NSA white paper, and Megan, I'll send you the link for any viewers that want to read the paper themselves. But if you just look at the index, you're going to see an awful lot of commonality. And then, miracle of miracles, and it really was a miracle. I don't even remember how I found this. I came across a 1990, I think, 7 paper, a peer review paper on smart contracts. And you
Uh-huh.
can't talk about one without talking about the other. So, and then magically, Bitcoin was born in, I believe it was April of 2009. And in March, on March 9th of 2009, was when the global central banks started on that quantitative easing, or massive hyperinflationary money supply printing.
Right.
I don't think that any of this is a coincidence. And this technology is not brand new technology anyway, it's how it's being introduced to us. So my feeling on Bitcoin, and I've been watching it since it was, like pennies.
Mm-hmm.
But my feeling on it was, if the whole system that we have right now is based on confidence, and I'm kind of jumping, but the central banks already lost confidence in each other. We can do that on another one. The banks don't trust each other anymore. They know they're all insolvent, so they're not loaning to each other. The only piece of confidence that is yet left in this system is the public confidence in the fiat money.
Wow. That's a bit
Okay?
scary.
But it's true. And I did a whole thing on confidence, and there's lots of evidence on it. I mean, and we could go into that, if you want to, but they needed to set up a trustless system. And voila, we now have technology. Now, it's been around since 2009. if you look at some of my work on that, you'll see that the big banks and the investment banks and a lot of the corporations started to really get heavily involved in it, particularly in 2015. And all the central banks are looking at developing their own cryptocurrencies. So we'll probably have a dollar coin. There's talk of the Fed coin. So all of this stuff is happening because they know that this next system is not going to look like the old one. The old one died. We just don't know it. The central banks essentially put it on life support to try and get all of this new technology in place faster because they lost control in 2008. Okay.
Right.
So for me, even though I am 100% certain that that's the direction that we're going in, there's no doubt in my mind. They're kind of doing regulation light with a lot of hands off to let the private corporations develop the technology because it's not really ready yet. And if you listen to the interview I did this morning with Ernie at Traders of Futures, who is a technologist, he also confirmed that.
Yeah.
So it's not practical yet. So I am 100% convinced. I mean, I don't own any Bitcoin. I'm not a short-term trader. I am a long-term strategist. And I understand patterns and cycles and money. I call it the money life cycle, the currency life cycle. And there isn't even one little teeny weeny doubt in my mind that we are at the very end of this cycle. Now, the goal for the governments is to get all of this technology in place and get you to volunteer giving up your cash.
For Bitcoin or some other crypto.
Absolutely. Absolutely. Because cash like gold stood between them being able to develop more debt, right? And they had to reset that. It's the same thing right now. And so what they're talking about...
What do you mean? So cash, people holding, because an American person has $1 and they think it's worth $1, the more people hold dollars, it basically becomes like a gold, or no?
No. But they want to charge you... They want to go to negative rates because they've only been, that's what this whole round of raising rates is by the Federal Reserve. It's not because the economy is overheating. So let me kind of back up here. Okay. Here's their tool, simply put. If inflation is running up too much and people start to scream, so the economy is running really hot, they raise interest rates and fewer people borrow and spend. So in theory anyway, that slows the pace of inflation. Inflation compounds, right? Just think about it for yourself. That pack of gum, and I don't actually buy gum, but the price doesn't go down, right? So inflation compounds, right? Now, if they want to speed inflation up and they want to get people to spend money on a debt-based system, they lower interest rates all the way down, and that inspires people to go out and borrow and spend. Does that make sense?
Yeah.
Okay. So the problem is that through every crisis since we transitioned into a fully debt-based system, so since the 80s, okay, where they pushed the Federal Reserve, the central bank pushed interest rates all the way up to 20%. Anybody that was alive then, I remember I had a 5-year CD at 15%. Okay, so they ratcheted interest rates all the way up, and into every single crisis, I could be off on this shade, but I'll be pretty close. The average amount of the drop in interest rates was 5.75%. Well, what's that mean? If we have a market shock like February, if that market kept going down and they wanted to stimulate, we're in negative territory. So that's really what increasing the interest, and they say it, they may talk about the economy is really strong. Well, that's not true, and they know it's not true, and they're dumping an awful lot of money into it. That's another conversation. But they have no wiggle room, right? Now, if interest rates go negative, when you have money in the bank and the bank starts charging you noticeably high fees, okay, you're going to go and you're going to pull that cash out.
Right.
Well, if you pull that cash out and there's no consequence, the cash in your pocket retains its principal, not its purchasing power, but its principal. Now you've thwarted their efforts. There are limitations. They just tested it in Europe, in Japan, in Switzerland. They know what the limits are, how low they can go below zero. And what happened was safe sales soared in Japan.
Wow.
Because people were hoarding cash.
Wow. To put the money at home in a safe.
Voila. Okay. So, and the other part of that is when a central banks make a policy move and they put it in place, it takes on average 18 months to work through the system to know whether or not it had the impact of what they intended.
Right.
Now, you go purely digital, and everybody's in cryptocurrencies, okay? They say this. They can push a button, and if you've only lost $100 out of that 1,000, you're not going to go spend it yet? Okay. Well, now, how do you feel about $200? How do you feel about $500?
Well, who's got that finger on the button in terms of cryptocurrency?
Banks,
but we've heard that Bitcoin is decentralized.
Well, first of all, China's government is also decentralized. People don't understand what decentralization means. That doesn't mean that the power and authority is split up in 1,000 different places. It just means that there's different functions, right? So in a cryptocurrency and a decentralized system, it goes through all of these computer networks. But when you actually look at it further, like I said, China's system is a decentralized government, but all the power is at the top at the Communist Party, right? So decentralization does not mean that a government or a central bank will automatically give up power. And they are not going to give up control of their monopoly over money.
And one of the things that Eddie, sorry to interrupt, but one of the things that Eddie said on your show earlier today was that the whales, meaning the super rich people that hold a lot of cryptocurrency, in conjunction with the biggest miners, the people that are running the mining networks, which probably also are very wealthy people, that they can game the system and control the price.
100%, because these are the big, remember I said, the big corporations and financial guys got in 2015, most of it, 2015, 2016. You know, I mean, you're not going to take your laptop like you could in the beginning of Bitcoin and mine it. It's too expensive.
Right. The cost of electricity will outweigh the value of Bitcoin that you can get out of it. And we've heard Quinn Michaels talk about how the escalating computing power needed to mine cryptocurrencies will ultimately have such a draw on electricity that by current projections, it looks like the value may not equal out, which is an interesting problem.
Well, what's the value? Yeah. It's not even a tool of barter. It has zero intrinsic value. Gold has value. Pardon?
It's a scary thing. I mean, it's confusing.
Oh, it is. I mean, gold has value. People do not understand this. This is one of my personal pet peeves, because even people that understand money and gold will say, well, gold only has use in the financial system. That's not true. That is a blatant lie. Gold is used in manufacturing. It's used in art. I mean, there is gold that's used in jewelry. It's used in food. It's used in medical. It's used in the financial system. It has value because the entire world uses it. So there is always demand. And if it is physical in your possession, now you've got something that is truly decentralized, even according to the Bank for International Settlements, which is the most important bank in the world, the central bank or central bank. They call it the only true decentralized private form of money. That's why they don't want you and I to have it.
Right.
because
Well,
it prevents that inflation.
and of course, it's clear that you've got a strong interest in gold. ITM Trading specializes in precious metals. And of course, you're the chief market analyst there. So I think it's clear that you're a gold bug, one might say.
Well, I think that's an interesting statement. Okay. Yeah, you don't call them stock snakes, but pretty much every day somebody's getting fined for manipulating every single freaking market. Oh, pardon me.
Oh, that's all right.
I get emotional.
No,
Okay,
please.
every market, but I'll take that. However, for me, I'm really more of an historian and a technician. So when I came to ITM in 2002, it's because most of the formulas that I track, and most of the time in my formulas, I try and do as many standards so that you can double check on me.
Right.
Otherwise, I share my formulas. But most of my formulas confirmed what was happening in the currency markets. And therefore, since I'd studied currency and currency life cycle since 87, it was pretty clear that it was time to start to position. And at that point, spot was around, 250, 254. And I came the end of June. In October, the final formula confirmed that we were now starting into this final trend cycle, and we entered the first phase of the trend. And all trends, really. I mean, I'm huge on patterns, and so when you see a shift in a pattern, it means something. Could mean something
Yes.
positive. It could mean something negative, but it means something. And
Yes.
so a lot of my work is around, can you see this pattern? Getting the normal person used to seeing the pattern, and also used to seeing what the one percenters, what those that are in power, what are they doing for themselves?
You know,
So that
Lynette,
you
I'm
don't
so
need.
glad you're saying this stuff, because what you're saying right now is really what initially attracted me to your channel and inviting you on the program here. Rather than so many of the pundits that we've heard on the internet talking about cryptocurrency, just saying it's the future, you should buy it, you're getting into some of the details and explaining it in a way that allows people to make a more informed decision about
Yes.
how they want to get involved. And you and I
And
did have a
when?
brief, and when? We did have a brief phone call just prior to this interview, but we've never spoken before. I haven't prompted you as to what you should say, right?
Good luck with that one if you even
Yeah,
tried. But no, you did
haven't.
not prompt me on
But
anything.
what
No.
you've just said about patterns is so important, because I also look at patterns, and there are some strange patterns I've been observing. We'll talk about that maybe in another show. But I want to bring the conversation. Well, let's talk about patterns. There's something that's been happening that's not really related to the economy per se, but over the past week or two, there's been this purge of YouTube creators. And earlier in the week, I did an interview with Charles Walton, who is a super nice guy who's been on YouTube for 12 years and got pulled for doing a story about the Florida shooting. So we know that people are trying to control the information that goes out over YouTube, and I've begun experimenting with DTube, which is essentially a decentralized version of YouTube that we've heard so many people recommend, and it is supposed to allow creators and participants in it to earn cryptocurrency. And we can see a recurring character here, Mr. Bacon, who admits that he is retaliating for me having a downvote on a video. So apparently Mr. Bacon is in favor of suppression of free speech and wants to exercise his power on this burgeoning social media network,
How
possibly
did you know that
reducing.
you gave him a down thumb?
I don't think I gave him a down thumb. I would have only given a down thumb to a video that would be based on nonsense. There's a lot of people who like to claim that I'm a Mossad agent, but so far no one's provided any evidence whatsoever in that regard. They just keep posting videos. And I think the problem they had was, if you post a slanderous, defamatory video about someone, and slander and defamation, as I'm sure you know, are statements that are unbacked by evidence, that are made with malicious intent. If you post that on YouTube, the person has the ability to report it and take legal action if they should choose to. But when you post it on this decentralized network, it's decentralized, it's also unregulated. So rogues like this guy can go and exercise their power. Maybe he's got a lot of friends who are in on that community early. Maybe he's got a lot of sock puppet accounts that he can use to create an AstroTurf campaign, a false grassroots campaign, and downvote this video. So again, this is a decentralized network, but here we see it being manipulated by someone. Did Frank Bacon really dislike this video? Or, I don't know, he says right there, it's a retaliatory move. So irrespective of the quality of the content in that video, we see someone manipulating a decentralized network. And that speaks to what Ernie was talking about in your earlier video. I feel a little bit like it's a magician's trick where they're like, hey, look at this blockchain. It's decentralized. It can't be hacked.
Right. Look at it. From my understanding, 5G is in place, but
from my understanding of blockchain, it's highly resistant to hacking. And another thing we've heard Quinn Michaels say is that when you can't hack the system, you can hack the user, meaning you can always trick people somehow. And an associate of this guy, Frank Bacon, who's been the key proponent of this, me being Mossad lie, has admitted that he's a hacker. He calls himself a mind hacker. So he's actively out there participating in these AstroTurf campaigns using accounts that are not clearly him. Accounts that are false identities that he's using to manufacture consent and to create large groups of people that can sway these networks. So I'm very concerned about people manipulating these unregulated, decentralized networks. I think we all want a society that's bound by laws, and we all agree to how those laws impact us. So it's an interesting thing.
Well, it is. And what would also be nice while we're talking about this utopia is if everybody had to live under the same laws.
Right.
Okay. And so that definitely does not happen, but it does bring up is if you have a tool or you have a way to look at what those guys that are at the top are doing for themselves, then you don't necessarily need to understand or know all of the nitty-gritty. Because my personal motto is I think you should always do what the smartest guys in the room are doing for themselves on any given topic.
Right.
And who knows more about money than central banks?
Right.
And what are central bankers doing? Well, since the crisis hit in 2008, they have been piling into gold.
Really?
100%. Megan, make sure we'll send you the link on that one, right? On the central bank's gold purchases. And what are the 1%ers doing? Well, where I can see that is in the ultra rarity charts on collectible gold coins that start in the hundreds of thousands and millions of dollars. Well, I'm not spending $1 million on 1 ounce of gold, but anybody that can is either likely to have the ability to influence somebody that writes the laws or be one of those that writes the laws.
Interesting.
So they're buying very high-end rare collectibles that are the gold. So I've got all the evidence on that. So what am I doing for myself? There's not one doubt in my mind this is where I live my life. We are at the end of this currency's life cycle. I cannot tell you that you will notice it on Tuesday morning at 8:35. But I can tell you that by the time you do notice it, it's going to be too late to do anything. So the biggest issue, the single biggest issue that comes up during these transitions is food.
Yeah.
So my mantra is food, water, energy, security, community, which is why I'm doing this, barterability, and wealth preservation. The last two pieces, the barterability and the wealth preservation, you can do with physical gold and physical silver. And I would also like your viewers to understand that regardless of the form, gold and silver is monetary at its base. So if you happen to be lucky enough to have Aunt Bessie's silver, sterling silver, flatware,
Yeah.
anything that's marked sterling is 92.5% pure. And you don't have to melt it down. And it doesn't matter if it's bent or broken or tarnished or anything. All right? 14 karat gold, which is most normal in this country, is 58% pure. 18 karat gold is 75% pure. So if you have any of that, high school rings, even 10 karat gold, I don't know what the gold content is in that off the top of my head, but anything that's marked with carats, so 10K, 12K, 14K, etc., there's real gold in that can be melted down and separated and put into another form.
Right.
And then again for silver. So what that does is it just gives you a universal tool of barter that holds its value intact.
Right.
And I'll give you one guarantee. Can't give you a lot, but this one I can give you.
Yeah.
At some point, every single asset and every single instrument goes to its true value. And it's not the value that you assume. It is what is the most important function and how has history performed that value.
Right.
And without exception, over 4,800 times, every single fiat currency has gone to zero. And there's only 4 cents left. And that's official. So it means it's probably worse than that. And when they open their mouths and they say we need inflation, they're telling you it's overvalued. They're taking it down.
Wow.
So what gold does is it holds its value. Let them take it down. Because all trends work the same. So if you get used to what that pattern looks like, and that's what I try and teach a lot in my YouTube videos, okay, then you can be in the same position as the 1%ers because this is all about wealth transfer.
Right. And of course,
And
Lynette, if people want to buy gold with you, they can contact you at ITM Trading. What do you want to tell our viewers about how they can get in touch with you?
Well, they could certainly call us at 888-696-4653. But what really makes us different, and we are full service, so regardless of what it is that you need to do, you know, we can accommodate that. We've been around for a long time. But specifically, what we do here is a strategy that's based upon all my research on currencies and those life cycles that happen. So we want to have conversations so that we know what your goals are, what your circumstances, what you have to work with. I mean, you can start here with as little as $500, and there's no limitation on how much you can put in. We may have to, if you're coming in with 5 million, we're going to have to strategize because we don't want to hurt the market either. So, I mean, it's all about strategy. And what we really do, I don't know of anybody else that does it, frankly, is we create a customized strategy for you, and then we're with you through the trend cycle. And you even get your own booklet based upon your personal strategy so that if for some reason you cannot get a hold of us, if there's a blackout or something like that, you know how to use your gold and silver through the trend cycle, through what we are going through.
Right.
Because you can't escape it. The system has to reset. It does not function anymore. It is that simple.
Right. And I just want to remind our viewers that ITM Trading is not a sponsor of this program and hasn't paid me at all. I just like to invite any of my guests to promote what it is that they're doing so that we can all have some benefit from doing this. I've primarily invited you here for your incredible insights and your plain talk explanations of these really complicated subjects. I want us to, in the future, to continue to look into these, developing markets in cryptocurrency. Just while we've been talking, it's very important. And while we've been talking, I've just noticed something else interesting. All of the people who I've seen promoting these decentralized networks seem to be, when I click now on the video list, which I've uploaded several videos here to DTube that were here this morning, they seem to be gone. I wanted to show people the video that I posted most recently, a video about Harmon Wilfred, who is the first American refugee. So apparently the people that are, or some of the people at least, Frank Bacon, that guy's been one of the biggest proponents of DTube that I'm aware of. They'd rather be vindictive and do strikes against my content on DTube than to allow people to see videos about the government throwing people in jail for blowing the whistle on a criminal bank. Harmon Wilfred was a contractor to the CIA, and he discovered a criminal bank, and it seems like the people who are here on DTube looking at my videos are more interested in, oh, look who it is, another guy who promotes false stories. So, see, it's interesting to me that these guys are making money, $1.67, to suppress a very important story. And look at this. I mean, we've got hate speech here. So, I mean, Lynette, I don't mean to bring our conversation down into the dirt, but it's important for people to see how a decentralized network can still be manipulated by nefarious individuals and controlled.
100%, right. But it's sold like it's decentralized, that it's outside of the system, that it's this, that it's that, so that you adopt it and you go, oh no, I don't have confidence in that, but I can have confidence in this digit.
And that's the other word you brought up that I wanted to emphasize, confidence. So here, these individuals at once are trying to create confidence in this system. But it's interesting to me that the term con man comes from the word confidence. Someone wants to gain your confidence so they can trick you into something. Right. And I have suspected for some time, now I don't mean to demean DTube. DTube in many ways seems like a great idea. Steemit seems like a great idea. A decentralized network for storing these things is really great. But when we have confidence men who become involved, who try to lie to people about things to gain their confidence to achieve some end to their own personal benefit, well, that's something I want our viewers to be educated about so they can be on the lookout for it and not get burned by these con men who are trying to gain people's confidence when they don't deserve it.
Right.
Lynette,
that's a lot of what my work is about, and that's why I always give you links. So even as we've been talking, I'm like, send him the link, because I don't want you to take my word for anything. What I really want is for people to start to do their own due diligence.
Absolutely.
You have all the information and you disagree with me, rock and roll, hoochie coo. I mean, I'm not going to tell you your opinion is less valid than mine.
Right.
But, for somebody to tell me their random opinion against my well-researched understanding, oh no, forget it. That's not going to have any sway.
Evidence. I think you and I connect intellectually because we both rely on evidence. We've had people on this program who mention evidence. They mention articles in Saudi Arabian newspapers that they claim to debunk other guests, but we still haven't seen that evidence. So I really like your approach to this. I'm really glad we were able to have this conversation. Was there anything else you wanted to say to the audience before we wrap it up for today?
Well, I would say that since October, I have noticed quite a few, and you'll see if you go into the YouTube videos, I'll show you all of the pattern shifts that I've been finding. I would say to if you have money in the stock market and in the bond market and in the fiat money markets and tangible markets, that you should use this opportunity because we got a little teeny taste of what's coming in February. That's what the tax changes in the tax laws were about, which, by the way, for the public are temporary, for the corporations are permanent. So we're sold on that, and we just accept it. But I'd use this opportunity to get out now.
My guest has been Lynette Zang, and if you're not following her on Twitter, she is at ITM Trading _Zang, and you can also watch her very detailed, evidence-based, and highly informative videos on the ITM Trading YouTube channel. I want to thank you for joining us today, Lynette, and I do want to remind our viewers that Crowdsource the Truth is a community-sponsored news resource, and if people appreciate the reporting that we're doing, the guests that we're bringing you, I would encourage viewers to go to patreon.com/crowdsourcethetruth and become a monthly sponsor, even for $1 a month, $5, $10, really helps quite a lot to have that sponsorship. You can make a one-time sponsorship payment at paypal.me/crowdsourcethetruth. And of course, we have the handy QR code. You can point your Bitcoin wallet right at this video, and with this QR code, you can send Bitcoin to Crowdsource the Truth. If you're not on DTube and you like the show, I hope you'll go on there. I mean, I don't know, maybe these guys have already suppressed these videos to the point that you can't see them. I personally think the story of Harmon Wilford coming forward and exposing a criminal deep state bank is far more important than some ridiculous nonsense that these guys are trying to make up to suppress the video, but we'll leave that to the viewers to decide. Lynette, thank you so much. I look forward to having you on the show in the future, and have a great day.
Thank you. You be safe out there. Bye.
Thanks for watching, everyone. I'll see you tomorrow.